TV, online and on your smartphone. This is Ticker News.
This episode of Talk Your Book is proudly brought to you by Honan, providing a complete range of insurance, risk and financial solutions.
Fundies called me up, told me to take a look, but stay stubborn as bulls and talk their own book. Get the money, get the money, get the money.
Hi, I'm Chris Judd and you're watching Talk Your Book, and today we're very lucky to be joined by Anthony Doyle from Firetrail. Anthony, thanks very much for coming back on the show.
My pleasure, Chris. Good to see you.
Now, we'll get into your stock pick in a second, but maybe talk us through the Firetrail S3 Global Opportunities Fund and how you guys look to invest.
Yeah, Chris, so the fund is listed on the ASX under the ticker S3GO, and it's an exposure to global equities. And essentially what we are doing is finding the very best value and growth companies across an investment universe that is 20,000 companies. And essentially, it's a highly concentrated, high conviction approach of 30 value and growth companies, really unconstrained. But what we are seeking to doing in the strategy, apart from generating that alpha and generating that long-term investment performance that clients are looking for, is monetize the opportunity that exists in what is a structural investment thematic with significant regulatory tailwinds of sustainable investing. So we seek to identify companies that are providing solutions to some of the greatest challenges that the world faces, and think about it in a really pragmatic way. And what this results in is a highly differentiated portfolio from what you'll typically receive either via an active global equity fund or a passive global equity fund.
And what stock did you want to talk about today?
So today, Chris, I have a stock that we think can benefit from some significant structural tailwinds within the insurance market, and that's a company called Ryan Specialty, headquartered in Chicago, started in 2010 by a guy named Pat Ryan, as you would expect, and Pat is famous for being the CEO and founder of Aon for over 41 years. So He started the company, he got bored in retirement, Chris, and thought, I'm too young to be retired, and just went out and started a company, Ryan Specialty, a wholesale insurance broker, specializing in a part of the market that is growing at double-digit rates of growth, and that is what is described as the excess and surplus insurance market.
Yeah, and that's probably important to dig into. So maybe give us a quick overview of the three different business units they have, and then maybe a bit of colour on the E&S market and how that differs from the property and casualty market in insurance.
Yeah, sure, Chris. So three business units, the binding authority unit, the underwriting manager unit, and then the wholesale brokerage unit. And wholesale brokerage unit is the largest proportion of the business at around 60%, but the two other areas are likely to grow and are attractive business units for Ryan, in that of the commission that is generated from the sale of a policy, they can actually take 2 times the commission in acting as the either binding authority or underwriting manager. So that's an area that they expect to grow, but certainly in terms of acting as a wholesale broker, we're seeing consolidation around the retail broker network in the United States. So essentially where Ryan sits into the equation is those looking for insurance outside of the typical type of regulated insurance market. They will seek to enter into the excess and surplus market. So we're talking about those really hard to insure risks, those unusual types of insurance policies. But unfortunately, as we know, the world is becoming more complex. So this part of the insurance market is growing at double-digit rates of growth. And I'm talking about things such as climate catastrophes. We know that, for example, 1 in 100-year floods have all of a sudden started to occur in consecutive years. And we know that, for example, in New South Wales and Victoria. Other parts, if you work in a hard to insure profession, like you're a roofer, or you're an AFL coach, for example, you might seek to enter into the excess and surplus market for an insurance policy there in order to protect your livelihood and enable you to continue to generate an income.
And that's just much more bespoke, I assume, and the margins end up being a lot better because it is less commoditised.
Yeah, so typically someone will have had entered into the regulated insurance market and been knocked back 3 times, Chris. You're absolutely right. So you need that specialist approach that a wholesale insurance broker like Ryan can provide you in that interaction with the insurance company to ensure you get a policy.
And I've looked at some of the Aussie listed insurance brokers before, and obviously the show is sponsored by Honan, so we're very familiar and fond of the business model. But they carry no balance sheet risk and just have that happy knack of doing better in really uncertain, tough times, and not overly linked to the economic cycle. Are they some of the characteristics that appeal to you when looking at Ryan?
Yeah, it's not just climate change, but think about the frequency of cyber attacks as well, for example, and social inflation is coming through as a tailwind for this part of the market. You're absolutely right. They don't take on balance sheet risk, and there's no interest rate exposure, but they do benefit from the inflation of insurance rates and that rate policy cycle that's coming through. And for anyone watching today and they've gone and checked their insurance lately, I'm sure they have probably realised the inflation that they're experiencing in their premiums. So it is a way to get exposure to the insurance market in what is a fast and growing part of the insurance market, but build in a bit of inflation protection as well, Chris.
And no interest rate exposure, but they do sort of get that lag, don't they, between getting paid and then paying the insurers, and a higher interest rate environment gives them a little bump to earnings. Is that material, or it doesn't have a huge impact in that, 3 to 6 months where they can hold that money at a higher interest rate environment?
No, so it's that won't come through as much for the brokerage side of the equation, the wholesale broker, but that would have a significant impact for a company like QBE, for example, where for our Australian fund, we've actually modelled that a 1% increase in interest rates increases their top line earnings by 17%. So it is material for the insurers, but for the wholesale broker, like a Ryan, what's relevant is really clipping the commission on those premiums.
And 40 acquisitions since 2010. Can they sort of continue at this sort of pace, or do you think that acquisition spree will slow down over the next few years?
Yeah, management have suggested that it's likely to slow, Chris, but are obviously highly opportunistic and have some dry powder there should they wish to acquire, and we expect them to continue to do so. But what you're talking about is a highly experienced management team, led by Pat Ryan and the other founders of Ryan Specialty, all with a very strong pedigree within the insurance industry and also well recognised. So we anticipate that there are likely to be further announcements, but they're not going to be rash or rush into anything. And that's really interesting, really exciting for this business, given what we are likely to see in an environment of higher interest rates, that there are probably going to be some good deals on the table.
And their balance sheet can fund those generally without having to raise any new capital, you're expecting?
Yeah, that's right. That's right, Chris. Yeah, no issues there.
And talk me through the organic growth outside of the acquisitions. What's that's been like over the past 5 years? Because it looks pretty consistent.
Yeah, Chris. So recent Q1 results suggested, or they indicated, top line organic growth at around 30%, which is obviously very strong and something that management, they have given conservative guidance. We're actually above that in terms of our expectations. So we anticipate that we'll continue to see strong growth, which is why it trades on the multiple that it does, as it is recognised by the market that Ryan, being a pure play, essentially the only pure play that exists in the excess and surplus market, it is a way that investors can get access and get access to what is a secularly growing part of the market. So we anticipate that top line organic growth to continue to accelerate and a little bit above expectations.
Very good. We'll dig into numbers in a second, but we'll be back with more Talk Your Book after this short break.
TV, online, and on your smartphone. This is Ticker News.
This episode of Talk Your Book is proudly brought to you by Honan, providing a complete range of insurance, risk, and financial solutions.
Yeah. Fundies called me up, told me to take a look, but stay stubborn as bulls and talk their own book. Get the money, get the money, get the money.
Thanks for watching Talk Your Book. Now, Anthony, just to really wrap up the whole scene on Ryan especially, talk us through the numbers, maybe give us what their market cap is, what their PE is, and maybe a little bit about what their return on equity looks like.
Yeah, so the PE, so they're listed on the New York Stock Exchange, headquartered in Chicago over in the States. The PE trades around 32 times on a 1 year forward basis. And the market cap is around 11.5 billion USD. So solid sort of global mid cap type level of market capitalization.
And what sort of top line growth can you see them getting for the next, say, 2 or 3 years?
Yeah, so in terms of top line growth, we think mid-teen type growth. So certainly we believe it is an area, a way to play the insurance market where you can generate those double-digit rates of growth. And subsequently, that's really a view that's been reconfirmed by company guidance. They've continually hit it year after year. And that's why the share price trades on the valuation that it does, as that's recognized by the market. Now, in terms of our expectations, in terms of our price target, we think that from the current share price, there's 22% upside based on a DCF modeling from our analyst, Annabelle Riggs, that specializes in the insurance sector for us globally. And that's a reflection of, we believe that the market and the company is being conservative. We actually think they're going to deliver stronger both top line growth, organic growth, and subsequently we're likely to see growing earnings, and that will be reflected in a higher share price.
And you mentioned the founder being a bit of a legend of the insurance broking industry, and I think now north of 80 years old. His picture in the presentation would suggest he's sort of in his late 30s. But talk me through the key man risk on that and how you're comfortable with that and how Ryan Specialty are planning for his potential exit one day.
Yeah, so Pat Ryan is the majority shareholder, and that's obviously something that is a risk and something that we've engaged with the company on, in particular succession planning. And there is a strong succession plan in place. There's a guy called Tim Turner. He's a founder of Ryan as well. He owns around $200 million worth of stock. So he's obviously heavily aligned with shareholders. And he's really being groomed as the successor to Pat when he does decide to potentially retire for the second time. But I think the case of, the two lads over at Berkshire suggests that if you are passionate, if you are engaged, then certainly age is no barrier to continuing on.
Well, Anthony, it's a brilliant story. Really appreciate you coming back on Talk Your Book and sharing it with us and our viewers. Thanks very much.
Cheers, Juddy. See you next time.